Hello everyone, this is Betty Academy. Our job is to make school easier. Kindly subscribe, watch our videos, like, share, comment down below, and don't forget to hit the notification bell. In this lesson, I'm going to take you through an illustration on how to prepare an income statement together with a statement of financial position of a sole trader. And we are going to do that with the help of an illustration. Here is the illustration. Let's go through it together. We have Mr. John operates a cereal store. The following balances were extracted from his books as at 31st December 2021. That is where I'm reading. Then we have the illustration. Those are the balances that were provided. We have cash at bank, cash at hand, cash at bank, inventory at the beginning of the year, accounts receivables, we have payables, return inwards, sales, purchases, capital, salaries, water and electricity, telephone expenses, drawings, inventory at the end of the year, furniture, motor van, bank loan, rent received, and office rent. You are required to prepare an income statement for the year ended 31st December 2020. B. Statement of financial position as at 31st December 2020. Right? So, let's start with an income statement. Basically, an income statement is a financial statement where it outlines all the incomes together with the expenses of that particular period, and by the end of it all, it should also show the net income for the financial period. So here is the illustration. We have the illustration. So what you're going to do, we are going to start with the sales. So you start by that is the title of the statement, John income statement for the year ended 31st December 2021. Right, so the first thing that you need to do is to record the sales. Yeah, from the illustration you have your sales is 840,000. Here it is, you have your sales amounting to 840,000. Then there are those instances where there are those goods, those sales, once customers purchase those goods, some they don't match their orders, some may be in default, and those ones forms the basis why we have returns inwards. So that one you have to decrease, yeah, you have to deduct from the sales. So we have return inwards amounting to 7,500. You get your net sales of 832,500 shillings. Then you go to the other thing is to less cost of goods sold, right? And that one, you start with the opening inventory. If you look at inventory, we have two. One is at 1st January 2020, the other one that 1st December, right? We have those two. So the one that is at the beginning, that forms it's our opening inventory amounting to 315,000. Then you add purchases. From illustration, we have purchases of 307,000. Yeah, 307,500. Yeah, 307,000. And here it is, we have the purchases here. That's the purchases. Then we go to, once you add opening inventory plus the purchases, you get goods available for sale. But by the end of the period, you did not sell everything. There is the less closing inventory. When you look at our illustration, we have the inventory as at 31st December 2020 amounting to 202,500. So that one you less this one, 202,500,000. So you get the total. Yeah, the total here is what you get as less cost of goods sold. So this figure, yeah, 622 minus this one, you get 420,000, which is our cost of goods sold. And once you deduct from this one, which is our net sales minus cost of goods sold, you get your gross profit, which is 412,500. Yeah, I hope you're able to see that. 412,500. Then when you look at our illustration, right? When you go through, you need to add any other income. You realize that any other income here that you may have is the rent received amounting to 18,000. So here, sorry, this one I had to put it here to insert it here. Yeah, I had to insert it here, the 18,000, but this one is for the rent received. Otherwise, you are supposed to, under this particular column under gross profit, you write add other incomes. Just below the gross profit, you write add other incomes, and that's where this one falls, 18,000. Then from there, you less operating expenses. When you look at our illustration, we have several operating expenses. From here, we have our salaries, water and electricity, telephone expenses, drawings is not an expense. You go all the way to office rent. So, and that's what you'll put here. You write your salaries, water and electricity, telephone expenses, office rent, the total. The total amounts to 97,500. So once you add these two, which is you have 412 plus 18, that one is 430,500. 430,500, you minus these on 97,500, you get a net profit of 333,000, and that's the end of income statement. This one is a simple income statement of a sole trader, and apparently in our illustration it's an income statement for John. So we have John income statement. So the other requirement that you are required to do here, B, statement of financial position as at that 1st December 2020. Yeah, so when you come here, basically a statement of financial position, it outlines all the assets, all the liabilities together with the equity, right? All the assets, liabilities and equity. Yeah, so this one helps us with our equation. Yeah, this one can help us with our accounting equation, which is equals to assets, yeah, these assets is equals to liabilities plus equity. So, and by the end of the day, it has to balance. So if it's a statement that outlines the assets, we start with the non-current assets. So basically these are assets that you'll use them for more than one financial period. So in this case, when you look at our illustration, we have two of them. Yeah, from here, this one is an asset, cash is an asset, asset. This one is an asset, account payables, it's a liability. We go to capital is equity, drawings, it reduces our capital. Then we have furniture, motor van, all these two, they are non-current assets. Then we have bank loan, that one is a non-current liability. So this is how you put them down. You start with furniture. When you look at furniture, we have furniture and motor van. You prepare it as at this particular period. This one is the title, John's Statement of Financial Position as at 31st December 2021. So we have non-current assets, we have furniture and motor van. So we have furniture, motor van, the two of them. Then we have current assets. Current asset, these are assets. Yeah, they are very highly liquid, right? Yeah, so we start with cash at hand. When you look at our illustration, we have 18,000 and 165,000, and this is what we have here: cash at hand, cash at bank, 18,000, and the other one is 165,000. Then we go to inventory. At this point, you don't pick this one, right? Always be the one that goes to the statement of financial position is the inventory value, or rather amount, at the end of the financial period. In our case here, we have is at as it is as at 31st December 2020. So we have 202,500,000, and this is what we have, 202,500. Then you go to accounts receivables. Accounts receivables, here it is from the illustration. The amount is 120,000, and that's what you put it here, just the way it is, right? I hope you're able to see that. We have our accounts receivables. Here is the accounts receivables amounting to 120,000. Yeah, so from there you go to current liabilities. These are liabilities. They are short-term obligations that you will pay them, that the business is able to repay, or rather to meet them at the end or within the financial period. It does not spill over to the next period. So we have the current liabilities, and in this case we have accounts payables 150,000, and that's what you put here. Accounts payable 150,000. Then we go to long-term liabilities. These are obligations that you meet them for a financial period that is longer than one financial period. In this case, you have our bank loan amounting to 450,000. So again, you have your bank loan. Hope you're able to see that. Bank loan amounting to 450,000. Then you go to capital. Yeah, it's our equity now. Capital. We had capital of 223,500, and that's what you put here. 223,500. Then here you add net profit. Yeah, hope you're able to see that. Add net profit. This figure you just pick from here, you add it there. Then you less drawings. This is where we use our drawings. We have drawings, yeah, drawings 13,500. You put your drawings here. Yeah, you see, less drawings 13,500. So once you are done with that, you'll get the difference here. This one, the total, the figure you'll arrive at 543,000. So you add from here non-current assets. This one you get a total of 637,500. Then you add together with these ones the figure 18,165. You have 202,500, 120,000. You get 1,143,000. Then we go to current liabilities. 150,000 plus 450 plus 543. You get 1,143,000. Yeah, that's the end of our lesson. I hope you've understood something. So kindly watch out for our next video, and again I remind you, ensure you subscribe. Until next time, it's a goodbye.